Drug Regulator granted full approval to the Pfizer-BioNTech SC COVID-19 vaccine, stoking investors' hope that higher fuel demand will follow a potential step in the U.S. coronavirus vaccination rate. Health officials hope the action will convince unvaccinated Americans that the shot is safe and effective, and expect it could also prompt more state and local governments as well as private employers to impose vaccine mandate. Brent crude oil futures gained 66 cents to $69.41 a barrel, while U.S. West Texas Intermediate crude futures increased by 60 cents to $66.24 a barrel. Both benchmarks jumped more than 5% yesterday, helped by a weaker U.S. dollar after marking their biggest week of losses in more than 9 months last week. Well, we have Damilola Kimbami here now to help us understand the impacts, the overflowing impacts of this, both in other countries and in Nigeria. So good to have you, Damilola.
Good morning. Thank you for having me.
Yeah, so, well, great news there from the United States giving approval to BioNTech and all that. And it should all obviously have a spillover, especially at this time when we see a lot of countries reintroducing restrictions and partial lockdowns in many cases because of the Delta variant.
Yes, I agree with you that with the FDA's approval of Pfizer to be used for children 16 years and above, so at least that should encourage those that are still skeptical about accepting or collecting this vaccine that, look, now that it's even been approved for children, so it's safe. And one major thing or solution to addressing this COVID pandemic is increasing the vaccination rate. For instance, the IMF, in conjunction with the World Bank and the WHO, they've said that by 2025, that we could lose about $4.5 trillion worth of GDP, global GDP, due to the various variants of the COVID infection. And we're seeing that, and they also they have a plan to vaccinate about 40% of the population of each country by the end of this year and 60% by next year. But look at Nigeria now. We are barely up to 1% of our population. We know that at least we've received the Moderna vaccine, we've received more doses of the AstraZeneca, so that should help with the vaccination process in Nigeria and probably boost, increase it to 2%. But 2% of a population of over 200 million, we barely scratched the surface. Right. And the COVID, that threat is the most potent threat right now to the global economic recovery prospects. It's affecting both business and consumer sentiment. Take, for instance, now the UK Purchasing Managers Index dropped sharply as a result of staff and supply shortages. Their consumer confidence sentiment also declined because of COVID. And a lot of countries, like you rightly said, are beginning to impose travel restrictions and other forms of COVID restrictions. For instance, China, which is the largest oil importer globally, impose restrictions which are affecting both global shipping and supply chain levels. And because China is a major economic powerhouse and is a major trading partner, so imagine if they, because of the restrictions, they can't ship or supply. Definitely it's going to lead to shortages. And once there are shortages, it will definitely affect prices. And right now,
which is what has been happening anyway.
Yes, yes. And we know that, okay, fine, in July, the inflation, the consumer price inflation for the UK, it fell to about 2%. In China's zone also fell. US was flat, about 4.5%. But that's the consumer price inflation that we saw slow down in July. But the producer price inflation of China increased to 9%. And why I'm mentioning that, because we just talked about supply shortages as a result of these COVID restrictions. And usually it starts from there, because the producer is recording an increase in his cost of raw materials and goods and whatnot. His own price, producer price inflation is increasing. And if they can't accommodate that price increase, they will pass it on to consumers, and then you would see that CPI, which has been declined, start to increase. And for Nigeria, that is highly import dependent, yes, we've been recording a decline in our inflation in the past 4 months, but we have a high import content, so definitely that
imported inflation.
That's imported inflation. Yes.
Do we expect this move at the United States to affect China, because these are the two major countries affecting, pushing the price? Do we expect a direct spillover?
Yeah, so China too, because of COVID, the reintroduction of the virus in certain parts of the city is imposing its lockdown. So definitely what we're going to see is a ramp up, and that's what a lot of countries are doing. They're increasing the vaccination rate. So now that Pfizer has been approved, we might see other vaccines, whether it's Moderna or AstraZeneca, being approved also for use by children. But the thing is, the more people are vaccinated, that would definitely increase herd immunity and be able to protect people from new variants, because a lot of variants are coming up, and predominantly among the unvaccinated population. And that doesn't mean that if you are fully vaccinated, you're not still susceptible to the virus. It just reduces the chances. And also, even if you someone that has been fully vaccinated gets infected again, the symptoms may not be as significant or as severe as someone that is not vaccinated.
Anyway, metals, commodities like metals have been weak for a while now, so has oil.
Yes.
Is this from a trading angle now? Do you think this is a good time to start taking positions, at least now with this U.S. prospect for the vaccine? Is it time from a trading angle?
So from a trading angle, what is happening now has affected commodities in different ways. And so, for instance, precious metals have been the major beneficiaries of this uncertainty, because in a time of uncertainty, safe haven assets tend to thrive. So the likes of gold, the likes of silver. And for instance, now oil has been severely affected because COVID has affected fuel demand, because if there are travel restrictions, jet fuel, which is also gotten from crude, obviously fuel demand will be affected. And that's why we've seen in the past couple of weeks, we've seen that oil prices have been really volatile. Brent fell to as low as $65, $66 in the last 1 week, all because of these concerns that the rising COVID infection rates may affect the global recovery prospect. The recent recovery that we saw in the last 24 hours was because of a weaker dollar and a stronger U.S. equities market. But again, that right now, because the market is so sensitive, and because and it's very volatile, and because again, more countries are getting this infection, more countries are getting this new variant. So that definitely has dampened sentiment for a lot of commodities. And commodities are very prone, or they're highly elastic. Definitely would have seen that impact on their prices. So precious metals, definitely, for instance, gold, like I mentioned earlier. And the fact that right now it's unlikely for a lot of global economies to tinker with their interest rates, at least for the rest of this year. So there's a positive relationship between higher interest rates and the dollar. So if interest rates are still kept low, so the dollar would see continue to trade around this level. So we'll continue to see that shift towards precious metals such as gold. Yes.
Okay, so last week there was the sharing of FAC, the Federation allocation, and we saw an increase in the figure, about 4%. What drove that?
So one, in the month, and bear in mind that the fact that was approved that will be disbursed in August was based on July's revenue. And if you look at what happened in July, all prices were higher. Average was about $75 compared to about $73 in June. If you also look at oil production, Nigeria's production levels increased to about 1.44 million barrels per day, according to OPEC's monthly report, compared to about 1.43 million barrels in June. So definitely the increase is not that significant, but that impacted on oil proceeds. So oil proceeds contributed to the increase. Also, exchange rate gains have also impacted positively on FAC. And bear in mind that during all this, NNPC is still deducting from its monthly remittance to the allocation. And bear in mind that that's a major, NNPC major, or the NNPC funds a major contribution to FAC allocation. So imagine if the subsidy issue is addressed now,
we go back to the subsidy issue.
and NNPC can start to remit fully, coupled with Nigeria increasing its production levels, we could see FAC increase to about 800 billion naira in a month.
Yeah, but when we talk about that, it's also important that we also look at the other side.
Oh, yes.
Because when you remove subsidy, then you also have the other effects on the economy, on the people, on inflation, on costs.
Yes.
You know, so it's not
And that's why up to now we still have the price of fuel still fixed at 162, 165 naira per litre, because the government has said that until it finalizes negotiations with Labour, we're not going to see any price increase, because they know the significance of removing subsidies. Energy costs are definitely going to increase. So this declining trend we've been seeing in inflation could reverse. And bear in mind that in July, despite the fact that headline declined, food inflation declined, core inflation, which is headline less seasonality, such as energy, increased. And we still have a flat petrol price.
Right.
What if also electricity tariffs are addressed too? So we could see that shift in the inflation trend.
What's happening with domestic commodity or market right now? What's happening there?
Yes, so right now we've seen some commodities, we've seen them record a price decline, so tomatoes, yam, even gari. And as the harvest season commences, definitely that would have a positive impact because supply would increase, so we should see more commodities record and price decline. But then again, because like I said earlier, Nigeria has a high import content. So, and for instance, now we know that the CBN said that it spent almost about $1 billion on food imports just in the first 6 months of the year. So because of that high import content, because of the exchange rate adjustment, so that's going to continue to play on imported commodities. And that's why you see that some commodities will continue to record or will continue to record sticky prices. Yeah.
Just before, it seems, are we counting the gains of the CBN's intervention in the FX management? It seems that we're talking about gains now.
Oh, well, the CBN has done a lot of things, basically just to address this Forex issue.
Yeah.
So we're having about 43 items now on the restriction list, limiting Forex to certain companies.
Yeah.
So, but the thing is that because the local capacity is not there yet, it's still suboptimal. So in the short term, we may not necessarily be seeing those gains now because demand is still there and you've restricted supply. So definitely prices will still remain elevated. But as you build capacity and you increase the supply to the market, you can meet the local demand. Then we start to see that
still
play
back
out.
to, you know, the normal thing of we need to produce more
We
so that we
produce
can
more,
have more.
export
Exactly.
more.
Yeah,
Yes.
we cannot just
Get
depend
more.
on what is in circulation and expect to see a lot of change.
And also in terms of Forex supply, we know that the CBN said I increased supply to the banks by about 200%. That coupled with adjusting the price, definitely, and if you send the right signals to the market, because what is driving the market weakness, especially the power market, is uncertainty and speculative trading.
Right.
Once there is clarity, you would start to see that
All right.
movement.
Thank you so much, Damilola Kimbami,
Thank
Head
you.
Research at Financial Derivatives Company,
Thank you.
for
Thank you
giving
for
us
having
insights into the issues in the commodity market. So I will take a break now. When we come back, the federal government has indicated that there will be unbundling in the railway sector. How will that work? Join us after the break to find out.